What is crypto arbitrage trading? We'll get to that in a minute. But first, welcome back to another episode of Crypto in 5 Minutes, where I try to explain a single concept in the crypto NFT metaverse space in 5 minutes or less, roughly. So now that we know what we're doing here, what is crypto arbitrage trading? It's actually a great way for traders to make high-frequency trades with very low-risk returns. It's where investors make money off of the slight price differences of crypto asset across multiple markets or exchanges. And that's a lot of words. Let's try this. Crypto arbitrage trading is buying from one market or exchange and selling on a different market or exchange. Why would you do this? Price difference. There is no unifying market price factor that syncs up the price of a crypto across markets. Each one can and often does have a different price. So if you see Bitcoin is at 45,000 per coin on one exchange like Coinbase, and it's 45.5 on Kraken, that's a potential profit of 500 per coin. And that is all but risk-free. You don't have to look at a chart. You don't have to do any market research. You don't have to go look on crypto Twitter to take the temperature of things. You don't have to figure out the future price because you don't care. You care what the current price is. On a centralized exchange, that current price is whatever the most matched up order in the order book is. So that 45,500 that we were talking about on Kraken, that's because that's the price for Bitcoin that has the most transactions. Every time you match up an order on an exchange, you're agreeing that is the correct price for that asset. So that sentiment may be higher or lower depending on what exchange you're on. Decentralized exchanges are different. Instead of using the order book, the exchange has liquidity pairs. For example, UST and Bitcoin. In a UST Bitcoin pool, you have to put in UST to draw Bitcoin out. Once a purchase is made, the cost in the pool is rebalanced. In this case, crypto arbitrage traders are an integral part. Those traders keep the prices in line across exchanges. So where can you find these imbalances that arbitrage trading is benefiting from? Well, it might be as simple as a price discrepancy between exchanges. And you can see how either order book or participation in a liquidity pool can set different prices between those exchanges. Similarly, there may be imbalances between geographic locations. For example, cultural differences may cause one population to value a coin higher than a different region does. An arbitrator can make money off of that difference. There's also something called triangle arbitrage, but it isn't really limited to three. What it means is spotting the difference between three or more cryptos across one or more exchanges. And these are harder to spot as it generally requires capitalizing on multiple price differences in a specific order. So what are the risks? Fees and timing. In arbitrage trading, you're executing a lot of transactions with a narrow margin of profit. If you're not careful, those transaction fees will eat up all your profits and actually cost you money. And timing is an issue. Those price discrepancies don't tend to last long. The more people take advantage of them, the faster those price differences disappear. So if you're not already on the exchange needed, you have to transfer funds, which takes both time and money. With confirmations of 10 minutes to an hour for Bitcoin, the market could easily slip away from you. Then your opportunity is gone and you've lost time and money. In both cases, leaving funds on multiple exchanges is the best answer, though that would be too costly for a lot of people. Hopefully this gives you a better idea of what crypto arbitrage trading is and how by spotting the price differences between exchanges can give you a strategy. Thank you for joining us for another episode of Crypto in 5 Minutes. Remember to like, subscribe, follow, etc. so you get notified when we release the next episode. Remember, none of this is financial advice. Now that you're done here, catch up on crypto news analysis with the latest episode of Crypto Overnighter. We'll see you next time.